Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, in the third video today let's take a look as usual on the Bitcoin market. So here we have the big changes. It now gives us a direction, and now we could think about the further upward direction here. But it's actually the dollar rush that stands right now around the non-farm payroll release. Bitcoin stands a bit secondary place, but actually the changes that we see here could be really significant. So, but yeah, I will start with the possible risk factor, risk pattern that we have. Actually, speaking on the resistance area and different other patterns that we have on the daily chart, if you remember, everything stands good, everything stands bullish. So if you remember, here was the 618 resistance major level on the daily. Also bearish grabbers have been forming here as market shows this drop lower. And the market right now has broken both of them. So it has erased the grabbers, although they actually has provided good drop. It has moved above the major 618 resistance. Everything seems positive, but somehow I think that we should not ignore this chance, because this really could be a three drive. Initially we thought that that is a three drive. It's first drive, second and third. Market really has shown the reaction on this, but hasn't taken the final target, so market has not dropped below these lows, which means that we also should keep an eye on the possible this pattern. So that is another three drive that theoretically could be formed. And from that standpoint, we should pay additional attention to the 58.40 point and be careful with this area. If somehow market surprisingly will starts dropping here, shows this kind of action, it will mean that pattern starts to work and we could get the drop below these lows. Because if our suggestion is not correct and we do not have any three drive, market should not stop at this point. It should continue to move higher, because market is not a overbought on the daily chart. I will show you where is the overbought stands actually. The overbought stands 60, 61 even mostly, almost. It's no barriers from this point of view. Market is not at the fib resistance. Market is not at some significant fib extension. So here is actually free space of the market, and if this is really upward continuation, it should ignore this point and just continue move higher. If somehow market will stop somewhere around 58.40, 58.50 and starts dropping, that will be clear signal to us that we still have got free drive. It doesn't mean that market will definitely turn the direction or long term or establish long-term bearish trend. It could mean just the market will show the reasonable reaction, drop below these lows, some retracement, and then maybe it will continue move higher. But that's just a pattern that could provide additional risk to the long position if you would like to take it. From a perspective of our hand shoulders, you can see that we've got the clarity. So we said keep an eye on what will happen around right arm. If market will break it up and starts moving back to the head, it will mean that market is bullish and continue move higher. So here we've got the answer. Finally, it means that now we could plan for taking the long position. And how to do this? We have the upward rally, and I think that we could use possible bread and butter trade. For example, let's consider this really a very good first step. If market somehow will show the minor retracement, 30% support, maybe it will form even A, B, C, D pattern on the hourly chart. It will get regardless cheaper to buy. That could be an opportunity for taking the long position. So here's what patterns that we could really keep an eye on. Currently, jumping on the high on the market stands on the way up of the and breaking above the previous recent top. It's not very comfortable because you do not know where to place stop. I mean, if you will place stop, it really makes it too wide. And in situation, overall position makes it too risky. Besides, if our suggestion on the three drive will be correct, let's take a look at the final point, 58.40, 58.50, stands very close. this is just approximately $100 above the market. So it's not really very significant distance. And from that standpoint, overall position, the risk-reward ratio could be not very attractive. And it seems that in the current environment, current situation, all that we need to do here is to wait for a reasonable pullback, some directional pattern. As I said, this could be brand buy, for example. It also could take the shape of the 222 buy on the hourly chart. And trying to use this possibility that will provide us reasonable points for the stop order and provides good risk-reward ratio.